Have you ever gotten that feeling at the grocery store? That little nagging suspicion that you're getting less for your money, even when the prices on the shelf haven't budged? You pick up your favorite bag of chips, and it feels a bit light. You grab a roll of paper towels, and it seems to vanish faster than it used to. You open a new box of cereal, and it looks half empty before you've even poured a bowl. You're not imagining it. This isn't some conspiracy theory whispered in the checkout line. It's a real, documented, and widespread corporate tactic. It has a name: shrinkflation. And it's the hidden truth about inflation that companies are betting you won't notice. It's a sneaky way they're making you pay more for less. Instead of just raising the price, which you'd spot immediately, they reduce the size of the product while keeping the price the same. The price tag on that bag of chips doesn't change, but the price you pay per ounce, per chip, has secretly gone up. Today, we're peeling back the label on this practice. We'll show you the products that have been quietly shrinking, explain why companies do it, and most importantly, how you can become a smarter shopper and fight back. So just how widespread is this sneaky practice? The truth is, it's a systematic invasion of your shopping cart. In fact, a recent poll from Purdue University found that over 3/4 of shoppers have noticed shrinkflation at the grocery store. It's so common across certain aisles that it's less of an accident and more of a strategy. Let's take a walk through the store. We'll start in the breakfast aisle, a classic hunting ground for shrinkflation. Cereal boxes have become masters of illusion. The packaging might look just as big and bold, but the contents tell a different story. For instance, a family-sized box of a popular brand like General Mills Cocoa Puffs has been documented shrinking from 19.3 ounces to 18.1 ounces. You pay the same price, but you lose over an ounce of cereal. In another well-known example, Kellogg's reduced the size of some of its cereal boxes, contributing to effective price per ounce increases for consumers. It might not sound like a disaster, but it adds up. You're getting fewer bowls for your buck, and the manufacturer is counting on the fact that you're too busy on a Tuesday morning to notice. Now, let's head over to the snack aisle, ground zero for this phenomenon. Snack foods are consistently one of the categories most impacted by downsizing. A party-sized bag of Doritos, for example, quietly shrank from 9.75 ounces to 9.25 ounces. A company representative basically said they took a few chips out so they could keep the price the same. Even your favorite cookies aren't safe. A family-sized package of Oreo double-stuffed cookies got lighter, going from just over 20 ounces to about 18.7 ounces. The theme is consistent. The packaging promises abundance, but the product inside delivers less. But shrinkflation isn't just about treats. It's hitting your essential household staples. Paper products are a prime target. This is where companies get really clever. You're not just losing sheets from the roll. Sometimes the sheets themselves get smaller. In a well-documented case, a Charmin Mega Roll went from 264 sheets down to 244. Another example saw Angel Soft Mega Rolls drop from 425 sheets to 320. The package looks the same, the price tag is identical, but you're getting less. The deception doesn't stop there. In the beverage aisle, a classic example was when Tropicana downsized its popular 52-ounce bottle to 46 ounces. In the cleaning aisle, dish soap bottles have been trimmed down. Laundry detergent containers have seen similar downsizing. Even personal care items are being nipped and tucked. From coffee to pet food, pasta to peanut butter, the story repeats itself. It's a slow, methodical erosion of value happening right under our noses. Okay, so it's happening everywhere. But why? Why are companies resorting to these sneaky tactics instead of just being upfront? If you ask the companies, they have a ready-made explanation. They'll point to rising production costs, the price of raw materials, the surge in energy prices, and strained supply chains that drive up transportation costs. From their perspective, they're caught between a rock and a hard place. They need to protect their profit margins, but they also know that consumers hate seeing prices go up. So, they present shrinkflation as a compromise, a way to absorb costs without slapping a scary new price tag on the shelf. But that's only part of the story. The deeper truth is about psychology. We are far more sensitive to price than we are to quantity. You have a general idea of what a box of your favorite cereal should cost. If that box suddenly jumped from $4.99 to $5.79, you'd notice immediately. It would feel like a direct hit to your wallet. You might pause or look for a cheaper option. But if that same box quietly shrinks by an ounce and a half, are you likely to notice? Probably not. Most of us don't memorize the net weight of every item we buy. We shop on autopilot, grabbing familiar packages. Companies know this. They bank on our inattention. They might even add a dimple to the bottom of a jar or use thicker cardboard to make the package feel just as substantial, even when it holds less. It's not illegal as long as the net weight is printed on the label, but it is undeniably sneaky. Beyond psychology, there's the economic reality. In the early 2020s, as the world grappled with supply chain chaos, another term entered the conversation: greedflation. While companies publicly blamed supply issues for rising prices, many were also using the crisis as an opportunity to expand their profit margins. One report from the Groundwork Collaborative found that from mid-2022 to mid-2023, corporate profits accounted for over 50% of inflation, a massive jump from the 11% they contributed in the 40 years prior. Instead of just passing on costs, many were padding their bottom lines, and shrinkflation became another tool to do it without triggering consumer backlash. This created a perfect storm where real cost pressures from things like energy and raw materials combined with opportunistic pricing strategies, leaving the consumer squeezed in the middle. A fair question comes up. If your grocery bill feels higher and your products are smaller, why don't the official inflation numbers always seem to reflect this? When you hear news reports that inflation was at 2.7% in late 2025, it can feel disconnected from your personal experience. The primary measure of inflation is the Consumer Price Index, or CPI, compiled by the Bureau of Labor Statistics, BLS. And to be clear, the BLS knows about shrinkflation and tries to account for it. Their economists track the unit price, the price per ounce or per sheet. So if a 64-ounce carton of ice cream is replaced by a 60-ounce carton for the same price, the BLS records this as a price increase. However, there's a huge catch. While the BLS accounts for the practice, its measured impact on the overall CPI number is surprisingly small. Official analysis has shown that the effect of product downsizing on the all-items CPI is, on average, just 0.01% per year. This seems impossibly low, and there are two big reasons for this gap. First, that 0.01% is an average across the entire economy. Shrinkflation is heavily concentrated in specific categories like groceries and household goods. When you drill down into those categories, the impact is much larger. For example, one BLS analysis showed that during the peak inflation of 2022, net downsizing accounted for an extra 0.3 percentage points of the 11.8% inflation seen in food-at-home products. So while it may not move the needle much on the overall rate, it has a very real impact on your grocery bill. Second, there are questions about the data itself. The BLS uses a statistical practice called imputation to estimate missing data. While this is a standard tool, a heavy reliance on estimation can create potential blind spots, raising the possibility that the official data doesn't fully capture the frequency of these subtle product changes in real time. This could further widen the gap between official statistics and the lived experience of shoppers. And shrinkflation isn't the only hidden force. There's a related, equally frustrating phenomenon called skimpflation. This is when you pay the same price but get a lower quality product. Think of a recipe changing to use cheaper ingredients, fewer chocolate chips in your cookies, or a hotel that offers less frequent housekeeping. Just like shrinkflation, skimpflation erodes the value you get for your money, acting as another form of hidden inflation that official numbers struggle to fully capture. It's easy to feel powerless. Companies are using psychological tricks, and the economic environment gives them cover. But you're not. The entire strategy of shrinkflation is built on the bet that you won't pay attention. The moment you do, you start to take back control. Here's how. The single most powerful weapon in your arsenal is the unit price. This is the one piece of information that cuts through all the deceptive packaging. It tells you the cost per ounce, per pound, or per 100 sheets. By law, most stores display this on the shelf tag, usually in smaller print. This is your key to a true apples-to-apples comparison. Don't just look at the main price tag. Look at the price per ounce. That will instantly reveal if the family size box is a better deal, or if your favorite brand has secretly become more expensive than a competitor. Making this a habit is your #1 defense. Second, question your brand loyalty. Companies with trusted brands often engage in shrinkflation most aggressively because they believe their customers won't switch. Prove them wrong. Use the unit price to compare your go-to brand with the store brand or other competitors. Data from 2022 showed that nearly half of consumers chose to buy a different brand when they noticed shrinkflation. Being willing to switch sends a direct message to companies that you've noticed their trick. Third, use your voice and your phone. If you discover a blatant example, take a picture of the old and new packages side by side. Post it on social media and tag the company. Consumer watchdogs and news organizations often pick up on these posts, putting public pressure on companies to be more transparent. Finally, consider buying in bulk, but do it carefully. Often, larger packages do offer a lower unit price, but don't assume this is always true. As we've seen, even party-size products are prime targets. Always check the unit price before committing. The goal is to get more product for your money, not just a bigger box filled with more air. Exposing these hidden tricks and empowering you with the truth is what this channel is all about. If you want to stay informed, learn more ways to protect your wallet, and become a smarter consumer, make sure you hit that subscribe button and turn on notifications. And now, I want to hear from you. You're the ones on the front lines of this. What is the single most outrageous example of shrinkflation you've personally seen? Drop it in the comments below. Let's create a massive list together, share information, and help each other spot these deceptive practices. The hidden truth about inflation is that it's not just a number you hear on the news. It's a quiet, calculated campaign being waged in the aisles of your grocery store. Shrinkflation is real, it's widespread, and it's a deliberate tactic used to protect profits by making you pay more for less. Companies are betting on your complacency, counting on the fact that you're too busy to notice the disappearing ounces and shrinking sheets. But you are not a helpless spectator. The power you have is in your awareness and your choices. By becoming a unit price detective, by being willing to switch brands, and by using your voice to call out deception, you disrupt their strategy. They are betting on you not noticing. It's time to prove them wrong.